All right, James. So we've already had lots of things that we've spoken about that we know we need to bring onto an actual recording. But before we get onto that, maybe let everybody know a little bit of your story and how you got to being so passionate about things like what is money, macroeconomic cycles, history, because I know you're big on that, and then Bitcoin and sovereignty.
Yeah. So my first experience with Bitcoin was actually back like in, I think like the first like bull run. Got caught in a couple like scams. I don't know if you remember the things that were going around back then.
Me too.
Yeah, didn't hold on to it. Obviously, we were looking to make money. Didn't have any long-term vision with Bitcoin, but I did get into it back then. Got scammed out of quite a bit of Bitcoin. And then I come from a finance background, so I graduated with a degree in finance, went into work in the investment world. And then actually you and I met basically during like the whole COVID thing. And we were in a company that taught trading. And I, at the time, had been looking for something to learn how to trade. It happened to be Forex was what we started out with mainly, or what most people did. And then I started to kind of gravitate towards like the crypto portion of the program. And then through trading and understanding Bitcoin, and then basically, Bitcoin was kind of the thing that brought me down the rabbit hole. It was people that are part of the Bitcoin community, but it brought me down the rabbit hole of like what is money? Why is Bitcoin a good alternative or a good replacement for the US dollar or gold? And then I just literally became like, when I say obsessed, like, reading books. And basically a lot of it has to do with, and I would imagine that if you were to look at the person who founded Bitcoin, they probably had a background in Austrian economics, right? So Keynesian economics is the economics that we learn here in the United States. It's the economics that's taught in our schools, but Austrian economics is all about sound money and free markets and things like that. So it was really Bitcoin, I would say, that kind of brought me down the rabbit hole of everything that I now have become obsessed about.
Yeah. And I've always seen that in you as well. Like and I think we're very similar in that sense that and I think a lot of people that do have success in anything they put their mind to are people that become obsessed. Like you become so, even we can use the word like passionate, that you're just like, but I think it's like a spark where you're like, it's like curiosity that you're like, I need to understand how this works. Like I need, like I really strongly desire to understand the roots of things rather than just like surface level. So yeah. I've seen that with you with like several things, which is cool.
Yeah, but that's exactly what happened. So I basically became, obsessed with, first trading. And then when I started to like really look at Bitcoin, I think it's probably started to happen after the whole COVID thing. And, I was always into, macroeconomics to a certain degree, but I never got into like the whole, like, I guess, what is money thing after COVID, after all that thing, all that happened, even living through. So like I was in the finance world as an investment guy and lost my career because of what happened in 2008 and 2000, the collapsing of all the banks and the mortgage-backed securities and all that. But it was, it was after all that, like, 2020, where I really kind of, and there's a couple of people that influenced me into doing that. Like, just people, I just heard conversations about it. And I just, like you said, became like completely obsessed.
Yeah. Well,
and I think, not to cut you off, I think most people, and coming into an election season, most people have zero idea of the issues that are going on in this country and why they exist. And for me, you can basically bring it back to one thing, and that is the centralized control and monopoly of the money supply in this country. And that is period, point blank. There's no other, that's what causes all the issues in this country.
So let's dive into that. Can you explain about Austrian economics? And is that what it's called, Austrian economics? And versus the other one that you said that we have in the US. What are the differences? Can you talk a bit on that?
So first, I would say that because the the foundation to all of this is kind of like money. Like, what is money? So like, I think what I'll do is, if it's okay with you, I explain like, how money came to be first, because everything revolves around money. Money is one side of every transaction. And to just give you like a brief overview, the difference between Austrian economics and Keynesian is the Austrians believe that there's no formulas that some academics can put together that will determine the outcome of human beings and business cycles and things like that, because it's all based off of human action. And like, there's a book actually by Ludwig von Mises called Human Action, which is like the foundation of all that, where the whole Keynesian theory is that, everything is about consumption, and that we need to, when times are bad, inject money into the economy to, kind of fill in the gaps and bring things back into equilibrium. And that actually is what exacerbates all the problems, or what creates all the inequalities and the gaps in wealth in this country. It's what causes inflation, which is what robs from people that are saving and allows people that are super wealthy to continue to get more wealthy, right? So as far as like the origins of money, like if you really want to get down to it, I think it's important for people to kind of have an understanding of like what is money? How did it come to be? Money started with the barter system, right? Like, so if you go way back in time, and like there's evidence that stuff exists, and I think I have a video on this on my Instagram, but there's stuff that exists like back in like ancient Sumeria of like ledger-based systems. But if you go back to like the more recent ancient times, the barter system was basically, I have something that you want, you have something that I want. We make an exchange based on what that is. Like, let's say you are a wheat farmer and I own cattle, and you need some cattle and I have some wheat. We figure out a rate to wheat to cattle, and we make that exchange, right?
Yeah.
The problem with the barter system was you had to have what satisfied what you call a double coincidence of wants. Meaning like, yeah, if you were filled up with cattle and I only had wheat to offer you, and maybe you needed some shoes, like there was nothing that I could offer you.
Yeah.
Right. So people had to come up with a medium of exchange. It always ended up being something in the form of like a commodity. Like you can look at, I mean, if you go back, like shells were money at certain points in time. You had cattle, you had grain, right? Things that were like a saleable good, something that most people used, right?
Yeah.
And then what happened over time was basically metals always ended up winning out for a multitude of reasons, mostly silver and gold being the one that won out. I would say as time went on, gold was the thing that basically, has won out through millions, thousands of years of history.
Exactly.
Literally since the ancient Egyptians. And why? Because if you look at money, there's a handful of properties that basically money needs to have. Number one, it needs to be divisible, right? You need to be able to divide that thing. The reason why cattle isn't something good for exchange is because if you want, if I want to sell you wheat, like I can't chop my cattle in half and start giving you pieces. Number two, it has to be a unit of account, meaning like there's a measurable amount that is worth a certain amount of money. It has to be fungible, meaning like $1 in my pocket is the same as $1 in yours. It has to be portable. If I want to move from city to city, I have to be able to take my money with me. And that's one of the things that I think gold lacks that Bitcoin kind of excels at. And we can get into that later on. Definitely. And the reason why I think that the market will eventually choose Bitcoin, not that I don't think gold will have a place, but I think that, from a portability standpoint, gold that's the problem in today's society. And then most importantly, it has to be scarce, right? Like if I can just create something out of thin air, that thing becomes worthless. So the reason why gold became so popular as a medium of exchange and as money is because of what we call a stock to flow ratio. It's essentially indestructible, right? Like you can literally go to a shipwreck from thousands of years ago and the gold will still be in form at the bottom of the ocean. So stock to flow ratio basically says the amount that is in circulation versus the amount that comes new every year, right? So stock to flow. So how much is being mined, which if you're familiar with Bitcoin, versus how much is actually in existence. And the higher stock to flow ratio, the better money it is. And that's why silver was never quite as good, because silver kind of had all of these different uses. It was used in electronics. It was used in, conductors of electricity, things like that. So it wasn't quite as good of a money as gold was. And gold always ended up winning out. And if you look at every society, basically all the way up into the beginning of the United States of America, they used the bimetal system, but gold was always used, right? You can go back to the Romans. You can go back to, the medieval times. Everybody used gold as money. And it's still used today.
It is.
So the idea is that if money can be created without some kind of labor on the other end, like if I can press a button and make gold, it basically devalues that thing as a medium of exchange, because there's no labor. You had to do something to farm your wheat, to harvest it, to transport it to me. There's labor involved in that process. If there's no labor involved in money, which is what we have right now, where I can just press a button and through what's now not even paper anymore, it's just a digital footprint in a bank, you're basically going to make that thing worthless over time. And that's why gold always ended up winning out. And the one thing that gold lacked was the portability thing. And as we became a globalized economy where you were doing transactions worldwide, it was very difficult if we wanted to settle our transactions, in 25 kilos of gold. Like I had to literally ship it over to England. So we started using ledgers, which is where gold became exploited. And it actually became exploited way before that, I won't, but feel like goldsmiths. I mean, you know what a goldsmith is?
A goldsmith?
Yeah. So the first, what I would call I guess you would call the first banks were we're back in ancient times. I have some gold, but I don't want to hold all my gold with me. So there was goldsmiths. So the goldsmiths would basically be like banks. And what they would do is they would, take our gold and they would give you a note that says, Corinne has, $500 worth of gold with me. Well, what those goldsmiths started to realize was not everybody's going to come and collect all their gold at once. So if, Joe needs a loan, I can loan him some of the stock of gold that I have. And then as long as he pays me back within before Corinne comes and gets her gold, I'm good to go.
Yeah.
And that was basically where fractional reserve banking, which is another part of the problem, started. Was in that was the part of where that came in, because basically they're lending money that's not actually theirs to lend. And if everybody was to come collect at once, that money's not there. And that was the beginning of fractional reserve banking. And that was the one thing that gold, it was portability, for the most part. But then that was the other thing is that it wasn't a transparent ledger.
Yeah.
Because you had to rely on the trust of the people that were being a custodian to your gold.
Okay, so just really quickly, one important thing that we forgot and that we were talking about is where do you go and buy gold? Because this is a big question. It's actually one of the questions that I constantly have as well, because it's kind of who do you trust? Who don't you trust? Is what I'm getting real? So help us.
Yeah, so it's gold it's something that when I first started getting into gold, I was worried to buy actual physical gold, even though one of my best friends has owned pawn shops and now owns a refinery, which is, and maybe we'll post the link to the website, but it's Crown Mint. But basically he refines and processes his own gold and into whatever size bar you want. And it's just like Bitcoin. You're nervous about where do I store it? How do I learn how to do it? Right. So with gold, when I first started doing it, I would buy, ETFs. And there's a couple of different problems with ETFs. Number one, if you buy the ETFs through Vanguard, State Street, you're not actually owning physical gold. They basically do some kind it's just not they're not holding gold in custody and you're owning a portion. they basically use like futures contracts in the delivery as like actual holdings. So it's just not real. Like it's not like Sprout, just to give them a shout out, actually is like if you want to buy online, you buy Sprout. It's an ETF. They actually hold gold in custody, and you're just buying a share of the gold that they have in custody. So it's like actually holding gold in custody, but you don't actually own the physical gold. For me, now I think holding physical gold is the same thing as like having Bitcoin on like a hard storage and having your own keys, right? Yeah. It's yours. Nobody can take it from you except by force. You're probably going to want to have a safe, I would say, some kind of even a small safe. But, the same way you would buy like a couple of, like $50 in Bitcoin here, $50 in Bitcoin there, like you can go buy like, a gram of gold for $100 or $120. My buddy, because he melts, refines, does the pawn shop, he sells his gold at a lot better premium. Plus, you're not going to pay brand name. It'll be stamped with his company name, but you're not going to pay like the premium that you would pay with like, like a Perth or one of those companies, which I don't know if you're familiar with the names because they're just brand names, but they charge a premium on top of the gold. And then they charge a premium because it's in their packaging and it's, known brand name. For gold, who gives a shit what the actual brand name is? You just want to make sure that it's pure gold. So we'll maybe post a link for people if they want to buy gold, but it's one of my best friends in the world. I've grown up with him. He, owns a pawn shop. He takes the gold in, he refines it himself, processes it. He also makes gold jewelry, but he has a refinery that if you want to buy a 5-gram bar, you can buy a 5-gram bar right online. You wire the money, he'll send it to you through your mail, and you can start investing in gold the same way you would with Bitcoin, which I think the combination of both is just it's a very safe avenue.
Agreed. So goldsmiths were essentially the now central banks that were holding the gold for people. They created the IOUs. And isn't that how then the US dollar came about? It's essentially the piece of paper of the IOU.
Yeah.
Well, that exactly. Was when it was backed by gold, because then wasn't backed by gold anymore, and they removed the backing by gold for the US dollar.
100%. And that's so. The difference is with a goldsmith. Like if a goldsmith lost his credibility as a goldsmith because he wrote too many IOUs, there was nobody to kind of like bail him out. Like he just lost his credibility, and you'd have to like find a new goldsmith, and the market would kind of weed them out. But the United States started, number one, it was a United States, meaning like you had a bunch of first colonies, then states that were united, all with different laws, different values that united under one common ground. And then you had a bunch of banks that were basically mostly state ran, right? And I'm going to go fast forward to like when we basically started with the gold-backed dollar or silver-backed dollar. And what that was essentially, it was a gold you would basically, let's say, deposit your gold in the bank. The bank would give you notes, which were nothing more than claims on those dollars, which were redeemable in silver or gold. Like it used to say, like if you look at an old dollar, payable to the bearer upon receipt. And then you would go take your dollar to the bank and you'd be able to redeem your silver or gold. There was periods of time where there was issues where like in the 1800s where banks, had runs on banks and stuff like that. But it was mainly because of the same thing. Like the federal government got involved during different times of war, many different reasons why the Federal Reserve has been said to have been created. Have you ever read the book Creature from Jekyll Island?
Sure have.
Yeah.
Going down that rabbit hole.
Yeah, so that was like probably one of the first rabbit holes that I ever, like one of the first books that really made my eyes like wide open. Since the creation of the central bank, you can pretty much like look at that period of time. And that is basically number one, when we started a century of nonstop wars. You don't see inflation really start until a little bit later. But it's basically where they basically took control of the money supply. And this is not new. It was done back in like the times of like the Medicis. It was just done a little bit different because at that time, like the church had the power and the Medicis were working with like the Pope and all. But basically, they monopolized the control and the supply of money. So after the central bank,
Hmm.
was created. You had World War One, then you had the Great Depression, and then in 1933, FDR basically came out with with a law that said that private citizens can no longer hold gold, and he wanted everybody to turn in gold.
Is that something that's going to repeat with Bitcoin?
Like if they make it impossible for Bitcoin to, come into a normal bank account in businesses to allow Bitcoin to be used as currency, but I think Bitcoin's too far advanced technology wise, in my mind. And you probably know a lot more about the technology side of Bitcoin than I do. But essentially what they did was, because after the war and after what happened with the Great Depression, we were in trouble as a country, and they basically wanted the citizens to basically turn in their gold. Now, did everybody do it? No. But essentially what they did is, I don't want to say confiscate, because they gave $20 per ounce, I think was the number that they gave them at the time. They basically took all the gold in, and then literally the next year, 1934, they repriced it at $35 an ounce.
Wow.
Right? So what they basically did was just devalued all the money that they had basically put into existence. So to me, that was like the first default on debt that our government did.
Right.
And there's a lot of different reasons people will say that caused the Great Depression, but essentially it was an over leveraged economy, too much money put into the economy, which led to the Great Depression. And then in 44, you had Bretton Woods, which is where they basically tied after the world wars, right? And I'm not going to get into the reasons for all the wars, but basically after the world wars happened, the United States, because we didn't enter the war till late, had most of the world's, I don't remember what the percentage was, but we had most of the world's supply of gold, or a large percentage of it. Because while all of the other countries in Europe had their working age men fighting wars, we had stayed out of it until basically we were bombed by Japan. So we stayed out of it for the longest period of time. So we were sending them their goods and services. They were sending us their gold, right? So we ended up with all the gold. And then after the whole war ended, we had a large portion of the gold. They did Bretton Woods agreement was basically we became the reserve currency. All of the other currencies would be pegged to the US dollar through gold.
Yeah.
And that was the system that was created after Bretton Woods. So now you have the US dollar pegged to gold at $35 an ounce, and then all the other currencies basically pegged to the US dollar, as the currency.
And so there it was still Austrian economics until there was the depeg of the US dollar to gold, or had we already shifted then?
So once you have a central bank, Austrian economics is out the window, because the Austrians believe that everything in free market. I mean, it's it's a libertarian perspective kind of. Austrian economics basically says that the market will figure itself out. Mm-hmm. You always have ebbs and flows in the market, the same way you have seasons in nature, right? You and I can't predict that through some formula because some academic from Harvard says that, this plus this equals this minus this. Austrian economics says that you can't predict human action. Human action is what drives markets. And if you just leave everything alone, you're always going to have ebbs and flows, but you're going to have
like natural flow.
Yeah, you're not going to have such like big highs and big drop-offs. Keynesian economics, who, if you really look into who Keynes was, I mean, they say he was like a child rapist, and we won't go there, but that's
right. Alrighty.
Yeah. But he believed that you needed to basically centralize and control the money supply. And then you also needed to, in times of duress, when the economy wasn't doing good, you needed to inject money into the economy to lift the economy up. And the whole thing is all about GDP. It's about consumption. Austrian economics says free markets will always figure themselves out. Keynesians believe that there had to be the hand of God controlling markets, that the people, relying on, people like the central bank to figure shit out.
Yeah. No, 100%. And so it's like, it's as if we went from like a natural ebb and flow of humans evolving to something that is artificially created and controlled. And that all started from the creation of the Federal Reserve and the central banks.
I mean, yeah, I would say that would be the start. Yeah, that would be the starting point of. I don't know every date and every. We had some like during some of the wars, like during like the Civil War, you did have some government intervention into banking, where governments needed money and they would entice banks to basically get money for them through like treasury bills or stuff like that.
Yeah.
Where everything changed was the creation of the Federal Reserve in 1913. If you look at the free market as every side of a transaction, you always are going to have money on one side. And if somebody is controlling the supply of money, if they're controlling the interest rates, it's always going. It's not a free. It's no longer a free market.
Mm-hmm.
I mean, we still did relatively well. I mean, not just relatively well. The United States basically raised billions of people out of poverty. We were like the first experiment with the freest markets that had ever existed. We led and paved the way for civil rights, women's rights, and all of that stuff. That all happened because of capitalism. So like when people demonize capitalism in this country, it's like, do you realize like you go back thousands of years, slavery existed in pretty much every society, going back to the ancient Romans and even further than that. Do you think it's a coincidence that in 1940 something, I mean, obviously the Civil War for us was in the 1800s, and that's when we freed the slaves. But as a world, there was like a worldwide agreement in the 40s where slavery basically became, illegal and against world policy.
Yeah.
So do you think it has something to do with the fact that we no longer needed slaves because of the division of labor, because of the way that capitalism works, through me and you pursuing what we're passionate about, what we're good about, and dividing labor in that way and allowing it to benefit society as a whole? Now, surely we do things for our own self-interest because humans are naturally and inherently somewhat selfish, right? You might want to help other people, but inherently you have your own self-interest when you're doing things.
Yeah.
But
I mean, it's the way our brain's wired. Survival.
Yeah,
First,
exactly.
you want to survive. Yeah.
Exactly. So through that whole idea of division of labor, us pursuing our passions or what we're good at, capitalism, free markets, we were the freest markets that were ever created. The central banking and the Federal Reserve kind of threw like a wrench into that whole thing. And it took years to kind of like come to fruition. And we'll get into that, I think, in a few. But that was like the start of where, all of the problems began. Because when you have somebody pulling the strings, instead of allowing like gold consistently over time, if you look, had like about a 2% increase in
value.
Yeah, year over year, right? And that was because people went to work, they looked for gold, they mined, they put labor and effort into it. And if more gold was found, in an area, you'd have more people come in, the cost would get higher to mine it, people would fall out, and it would basically, the market would regulate and you'd have an equilibrium and it would kind of settle back down, right? With the creation of the Federal Reserve, now you have puppets pulling strings, based on whatever they feel is the right thing to do. Should I raise rates? Should I not raise rates? So, and that's also when, fractional reserve banking kind of really started to kick in. And that's a whole nother rabbit hole. Like most people have zero idea how fractional reserve banking actually works.
Yeah.
They think like you put, you deposit $100 in the bank keeps 10 and they loan out the other 90, which is not necessarily true. Like, so most people have zero idea like how the banking system works, but
yeah,
it's a highly complex.
I think a lot of people still don't actually know that when you're depositing like cash into a bank, it doesn't sit in your account. A lot of people don't even know that. Like the banks are using your money. That's where lending and borrowing all started from. But I have like a million questions, but let's go with, okay, So you've said like multiple times that the problem is the centralization. The centralization, their ability to print, to just press a button, not actually go and do labor and provide value and create. I always talk about like how money is energy, and to
Yeah.
have like a valuable money, you need to go and provide energy, which is just output. You can look at it from a spiritual perspective. You can look at it from a physics perspective. It's energy that you're putting out to like put labor, and that's what actually creates value behind something. But the US dollar, like you've said, is just a press of a button by a central entity that just chooses to print out however much they want. It's not even being printed out anymore. Now it's just electronic on these things. We can just see it, right? So you're saying that that is the problem that we have today, and that is causing, maybe even you can like talk about what we saw in 2007 and 2008, and how was that the problem? How do you see what happened back then? Do you see it happening now? Do you see it happening at a bigger scale? Is it still the same problem? And what is the problem?
Yes, it's the same problem. But the problem was severely exacerbated after 2008 and 2009 with what they called quantitative easing, which was like the first time they actually like injected, large amounts of cash at epic proportions. And at the time, it was to save the banking industry because it had become so over leveraged. But if you have to kind of reverse and go back to understand kind of like the build up to all that over time. And that was after Bretton Woods, we became the global hegemony as the world's reserve currency. We basically started to be able to do whatever we wanted, so to speak, with money. And that was, if you think about it, you had the Korean War, you had the Vietnam War. Wars don't typically happen at such a large scale if you have to go out and ask voters, do you want to pay for this war? However, if the government can just issue treasury bills or bonds or notes or whatever it is, basically debt, because that's become our money, without anybody having to vote, that's how we can continue to like fund all these wars. And I'll get into like, my whole belief system behind like funding wars, obviously, especially like right now. But what started to happen is other countries started to realize after, I said we had a lot of the world's gold after the Bretton Woods Agreement. Well, I don't remember what year it was, but Charles de Gaulle, who was the prime minister for France, basically called us out. You can go on YouTube and YouTube Charles de Gaulle calls out US on, world reserve currency. And basically what he says is that we're abusing our power as the world reserve currency. And they wanted to redeem some of their US dollar reserves because everybody was holding US dollars in their reserves or treasuries because global transactions were now being done with US dollars. So if I'm a foreign central bank, I had to hold US dollars in order to do global trade. And what started to happen is we became worried that we were going to have basically a run on the bank, which was the Federal Bank of the United States of America. And then Nixon closed the gold window, which is when we basically went completely off of the gold standard. And that actually is when things completely like took a turn for the worse. And there's a website, if you can, it's called it's WTF happened in 1971.com. And if you go there and you look, there's charts and charts about like just showing all of the stuff that has happened since 1971, since we went off of the gold standard. Because at that point in time, it became basically us carte blanche. We could do whatever we wanted because now there is nothing tying. Like before that, yes, we were the reserve currency. Yes, we weren't really being monitored, but still gold was tied to, the US dollar was tied to gold and essentially should have been redeemable for $35 an ounce. So if somebody wanted to redeem it from a foreign, a central bank, technically we would have to honor that. Yeah. Well, after 71, basically which it's amazing to me if you think about the rest of the world just kind of like went along with it. Like, okay,
exactly.
Just basically stole all of our gold, but they knew that if they tried to it would have collapsed the whole system as a whole. So then you fast forward a few years, you had the oil embargo, and then what happened was, I don't know if you ever heard of the petrodollar system.
Yes.
So we had to figure out a way to continue to make countries use the US dollar as the reserve currency. Well, what's the one thing that every country needs?
Oil.
Yeah.
Oil.
Yeah. Energy, oil, right? So we tell, Henry Kissinger goes to Saudi Arabia. He basically says, we will provide protection through the Red Sea and we will give you guys protection. However, you have to make transactions, your oil transactions with other country in the US dollar. Now other countries are forced basically to hold US dollar reserves on their balance sheets or treasuries, which allows basically us to spend ad infinitum. Because now they have to lend us money. They have to hold our reserves. So now, we basically have complete control over everything. And now there's nothing tying us to have any kind of responsibility at all. And then, you fast forward and there's a ton of things that happen in there. I mean, you had your period of inflation with like the Reagan administration, which is very similar to what kind of just happened, where Arthur Burns lowered rates prematurely. Then you go into the years of Greenspan where he had to like raise rates ridiculously high to kind of like get things under control. But it kind of proved to the world that we still valued, and we were willing to take a hit as an economy to get, to basically bring the value of the dollar back up, so to speak.
Yeah.
If that makes sense.
It does make sense. Absolutely.
So then you have years and years and years of us being able to do whatever you want, leading into now, obviously, there's a lot that went into 2008 and 2009, and mortgage-backed securities were a huge part of it, and the bundling of that. So, but basically, it's over leverage. It's when you have a banking system where there's no like restraints. You just have this over leverage. It's like when you trade crypto, if you go 200x leverage, you can liquidate your account a lot faster than you can if you just trade spot.
Yeah.
Right. So it's the same kind of thing. And basically after that, you had Bernanke and, that was the beginning of quantitative easing. Mm-hmm. And since then, if you really look, and I don't know how deep into this you want to go, but
you feel, go for it.
So since all of that happened, you're starting to see like kind of the unwind, and people will say like, oh, that's like you just being, conspiracy theory or whatever, but it's not. You're seeing like the last stages of, or the turn of the cycle. And Ray Dalio he has 2 books on it. He's got what's it called? The debt crisis, or
doesn't he have the fourth turning? Is that
fourth turning is another one. That's Neil Krauss. That's about the 4 seasons. But Ray Dalio has 2 books. One of them, he's got 3 books, but one of them talks about the debt cycles. The other one basically, right here. What's it called? Hold on. Yeah, the changing world order.
Oh yes, the changing world order.
Yeah, and basically what he talks about in there is it's like every country throughout the history of the entire civilization makes the same mistakes. You know what I mean? Through entitlement programs, funding wars, printing money, and devaluing the dollar or their dollar, whatever the dollar is at the time. They end up basically collapsing the economy from within, and there's a lot of signs that have happened since 2008 that you're starting to see the lack of trust from other countries, right? We've already defaulted twice. We closed the gold window in 71, basically robbing everybody of their gold, so to speak. You can say it, that's a harsh way to put it, but it is what it is. But you're starting to see, like, if you look at our biggest holder of treasuries used to be like China and Japan, Russia, right? And what you're starting to see with those 3 countries in particular is they have started to slowly decrease their treasury holdings and increase their holdings of gold. And it's because the people are realizing, like, we are in a debt snowball. Like, we are $35 trillion in debt. We have $1 trillion, almost two in interest, I think, that we're going to pay
Yeah.
on an annual basis. That is the second largest line item on our budget as a country. And anybody that knows anything about interest knows that interest compounds. When a lot of these treasuries were issued was during the days of what they called ZIRP, which was zero interest rate policy, or like low interest rates. So everything that is being rolled over at these new higher rates is just going to exacerbate that problem. And basically what we're doing as a country is paying off our credit cards with credit cards, except we're getting to the point where the credit card issuers are starting to realize, like, hey, we see what you guys are doing. We have to play along for now because that's the way the system works. But how long are they going to play along for?
Yep. Yep. And you can see it. They're slowly exiting. I mean, the petrodollar, they didn't renew the agreement. I'm not sure what the situation or update is with that. Maybe you can shed some light on that. I mean, we have BRICS nation. Obviously, many countries are moving to create a whole new something, and we can touch on that if it's going to be CBDCs or what's going on there or what you think's coming. But yeah, they're moving. They're moving, and you can see the shift. And so, do you? What do you see happening there? What do you think that is? Because, you know, even if we just talk about Ray Dalio's book, you know, it's kind of like what country's next. But that's where I personally see, like, it's going to be more so Bitcoin's going to be next. No matter where it is that you are in the world, it's as if we're creating a whole new economy, a whole new country per se, that is, and I have this image that I share all the time. It's like, you know, the rulers of the world and of the world economy. So it like started off with, what was it, like Great Britain, and then we had I can't remember exactly like the order. Maybe you know more than me off the top of your head, but it was like Great Britain was in power. Then it was like the US. Now the US is coming down and starting to lose that power. And kind of like, what's next? You have people that are talking about it's BRICS nation, it's China. Other people are saying it's going to be Bitcoin. So no matter where it is that you are in the world, it's not really about where you live. It's about how you're placing yourself. And we've probably skipped a million questions already and different things that we were talking about, but what do you see coming next?
I mean, so that's obviously it's a tough question. Like, yeah. So I think that like I probably align more. I mean, ideally I align more with where you are, where, you know, like the sovereign individual, and like, you know, where Bitcoin allows for the whole idea. If you really go back to the creation of the Constitution of the United States, was that exact thing. Kind of, it was a libertarian perspective where states had the power. The federal government was nothing more than like a referee to kind of manage the game. But the idea is that people that congregate in certain areas have the same set of values, and you don't want to give the federal government too much money, right? And ideally, in my mind, the more decentralized everything is, the better it will be. Bitcoin happens to be something that would allow for that, right? I mean, it allows somebody in like a place that is as long as you have an internet connection, and you don't even necessarily need one at all times, you know what I mean? But you can basically have money, because I would call Bitcoin, I would call it money at this point. I mean, yes, it's more volatile, but it's kind of proven itself to be, it's in the early stages, so it's going to have more volatility. But I think it's been widely adapted in my mind, where like, I think there's some manipulation going on right now because of the same way that they manipulated gold for so long. And then once, and this is kind of getting off topic, but like the United States and the people that don't want gold to be, the United States government doesn't want gold to run higher, because they know that if people start seeing gold as money that holds its value better than the dollar, everybody's going to escape the dollar into gold. So they, through years and years and years, they did things that, and a lot of it through the futures market, which kind of held the price of gold down. Well, once foreign central banks start buying gold and not, repricing according to like our exchanges, they can't control it anymore. And that's kind of what happened with China. You know what I mean? And all the but kind of getting back to where you're going, my idea would be probably similar to like what you're talking about is that the more decentralized we can be, where you have, is it going to happen? Like, I don't want to see that. Some, like, you hear people say like anarcho capitalism and things like that. Like, I don't think we'll ever get to a place where we won't need some kind of centralized government.
Right.
But I think the more limited the federal government is, especially in the United States, the better off we will be, the better off the world will be. And the way to do that is to take the control of money out of their hands, which is what Bitcoin does.
Exactly.
Right? Because it's the reason we've been able to basically do everything that we've done over the past however many, past 110 years or so, is because we basically control the money supply for the entire world. Everybody has to use it. We can just basically, and I think a lot of the wars and stuff that we start and everything else has a lot to do with that as well. To me, like, I don't know if you've ever heard of Balaji.
No.
He's in the Bitcoin space. He's got like a Substack. I don't know that much about him, but he has a book that I forget what he calls it, but it's basically about, it's similar to like, when you said the sovereign individual the other day, I'm like, man, I read that book so long ago. I can't even really remember like the exact premise of it, other than it was like the advancement of technology is going to allow people to basically be more sovereign as individual and not rely, right? And I think that's kind of was the premise of the book. Balaji, you would probably enjoy his Substack. He's really big into Bitcoin, but he has a book called The Network State. His whole premise is basically like you'll have a bunch of networks all over the world that are their own like states that run off of community. They have their own police force, their own rules, and basically a decentralized world, so to speak.
Yeah.
I mean, that's essentially, I haven't read it, but that's essentially what I got from listening to his thing. And it's because of Bitcoin.
Yeah. Yeah. And I see that too. Like, I continue to have this vision where, and we can even bring it back to kind of like what we were talking about before. It's like the Austrian economics where we were talking about like it's about like human nature and just allowing the ebbs and flow. That's decentralization versus that what did you call it?
Keynesian
economic. Yeah, the Keynesian economics instead is like the centralization. And we're already starting to see that with cryptocurrencies. Like Web3 was designed to be decentralized. Cryptocurrencies were designed to be decentralized. Bitcoin designed to and is decentralized. But we're starting to bring so much centralization even into this world because that's what majority of people know. Majority of us, like you said, in the past 100 years, majority of people don't live past 100. All we've been brought up with and all that we know and all we've been educated on is centralized systems, right? That's all we know. We only know banking systems and that's what we trust. Yeah. That's what we're used to. And so I feel like I see this movement where people are starting to be like, okay, I'm starting to understand Bitcoin. I'm now starting to understand the manipulation and the control that we have in centralized systems. Now here's a way to get out. It's called Bitcoin. It's called the DeFi space. And now I get to choose. Which one do I want to go down? I feel like there will be people that are going to be like, maybe not educated, maybe stuck even in fear and in the current programming. We can call it they're stuck in the matrix and want to continue down the centralized space. And then there's going to be people, and that, centralization here, we're talking about like central bank digital currencies, so CBDCs, people going down that realm versus other people being like, nope, here it is. This is going to be the new way. I'm going to go in a decentralized space and bring back my sovereignty. As the book, The Sovereign Individual, talks about that technology brings back to us. And even within itself, I think it's a choice. And at the end of the day, it always comes back to us people. Like we're the ones that make the decisions at the end of the day because we're allowing the power to be, it's even like before when you said, oh, like the US literally stole all the country's gold. why did they just allow that to happen? Like, it's at the end of the day, it always comes back to it's us people. We have the choice to bring a completely different example. But like A Bug's Life, the like Pixar movie.
I know all that. I don't think I know the story.
Well, it's essentially like these ants that are being controlled by the wasps. And then there's one guy that's like, hold on, the wasps need us. We don't need the wasps.
Yeah.
And so the ants like revolt against the wasps. And the wasps know that if they revolt against them, the ants take over and they're back to being sovereign individuals.
Yeah.
Just to bring a little fun movie, light movie.
Now that you said that, I've heard that that analogy before.
Yeah. And so I feel like we're going through this revolution of people. Some people are starting to see it. Some people choose not to see it. And free will. God gave us free will. So I feel like it's going to be a big division where people go centralized, others go decentralized. And maybe then there's going to be people that want to live a bit in between and live in both realms. I don't know how that will look. And just with the rise of technology, we see this massive revolution, or it's like, the next industrial revolution, but now we're seeing it in the technological revolution where a lot of people are also scared. They're like, oh no, like AI is going to take over my job. But what if you flip it and you're like, wow, AI is creating so much of an opportunity for you to be able to go and do other things, go into your higher, what does Bob Proctor call them? Your higher faculties that we have as human beings, rather than allowing AI to just take over things and we get stuck and we have no jobs, but rather we get to step into. Anyway, I'm going on to a whole other topic.
I agree with pretty much all that. And I think that I would say that like the problem is what you mentioned, is that there's so many people that are stuck in the matrix. I mean, even when you look at like and not to get into politics, but if you look at the political environment that we're currently in, I mean, you clearly have one side of like, you clearly have like one person who everybody that that is on that side is talking about, we need to limit control of the government. We need to do a check of the government. We need this. And then the other side is saying, we're going to fix everything. Just give us more money. We're the government. We know better. And it's like, yeah, we've been doing that for the past however many years, but some people are just so like caught up in like, they just want this like level of protection, I guess. And I think that's what draws people like probably you and I to Bitcoin.
Yes.
Before other people, right? Is our mentality is like, we don't trust the science until we do our own research. We don't trust authority just because they're authority, right? Like we want to do our own research. And the issue with like the whole decentralization thing is that you probably have to have a vast majority of people willing to go that route. And you have a small percentage that probably are already like on their way there. Then you have another probably, 30% that are in Stockholm syndrome, where they like, the government's going to do everything for me, and I just got to, hire, I just got to vote the right person in. And then you got, like you said, a group in the middle that kind of can be swayed either way. But in order for that like to kind of take place, I feel like you have to have all those things come together. And will the government, will they allow it to happen? Will they allow, because that takes everything that they're doing and basically throws it out the window. And I think that's why there's been such an attack on, I won't Trump, like,
yeah, actual attacks.
Yeah. Like,
actual attacks.
You got somebody, he may not be the most like polite person. He may not be the most, but he's going after everything that is. And when you if you got somebody like Robert Kennedy, when you see him and Tulsi Gabbard and all those people start to get on like the side of that, you realize like there's a problem. The problem is not the people in this country. The problem is not capitalism. It's not the business owners. It's the government has basically gotten way too big in this country. And we need somebody to kind of come in and check the government. And the way to check the government is by taking the control of money out of their hands. Because I don't know about you, but if they would have sent me a ballot that said, do you want to send however many hundreds of billions to Ukraine for war? I probably would have said no. And then they would have had to maybe work a little bit more diplomatically to try to get to figure that out instead of just sending weapons and, creating wars, which causes, just deaths for any reason, and that's a whole nother thing. But there's so many people that are so, in my mind, brainwashed. And I hate to use that word, but it's propaganda. This is, one of the best books you can read on it. But people are so brainwashed with what they hear on the news and even the numbers releases that they do. Like if you follow the non-farm payrolls numbers and all the stuff that they release, we have had so many misses and so many downward revisions in the last couple of years that it's you no longer, it's in the trading world, nobody believes a word they say anymore.
Mm-hmm.
It's all fabricated crap.
It sure is.
Right?
Sure. Can you share what that book is so people can go and read it?
Yeah. So it's called Propaganda. It actually was it was published in 1928. And basically it's a guy by the name of Edward Bernays. And Edward Bernays is basically the nephew of Sigmund Freud. I'm sure everybody knows who Sigmund Freud is. And basically he was hired to basically get consent. I don't know if you know the story of the Lusitania in World War I.
No, I don't.
But the United States did not want to get into World War I. They did not want to get into World War II. World War I, basically, we got in after the sinking of the Lusitania. The Lusitania was a passenger ship, but also had military capabilities. And basically, it was leaving the port of New York City. And if I don't get the exact story right, but it's something like this. Basically, what happened was the United States had gotten warning because there was the German U-boats, the submarines were in the Atlantic Ocean when it was crossing over into London or England or UK or whatever it was at the time. And we had gotten warning that they were going to sink the Lusitania, but we allowed our own passengers basically to get on the boat anyways. The boat was supposed to be just have passengers on there, which was basically a transatlantic trip from New York to the UK, but it had United States passengers on it. There was warnings that there had been, that the Germans were talking about sinking the boat, and it had 2 or 3 guides on the way over. And the story is basically they think it was set up. And conspiracy theories, people get but the guides had all of a sudden gone off course. The boat had been told to slow down to so many knots, and it ended up getting sunk with a bunch of American passengers.
Wow.
And basically that was the catalyst that sparked the war. And if you really want to get into conspiracy, you got to look at the Rothschilds and all the bankers, because everything is a bank. And there's basically the Rothschilds were funding both sides. It's a big thing. But basically this guy was hired by the US government. He talks about it in here to gain consent. And in his mind, it was a good thing to get the consent of the American people through propaganda. And he uses the word propaganda. That's where it came from, to get people to be on board with going to war. And they did it through the same methods that they do today. Just bombardment of people in, the local news and the media, and then going after, people of, positions of power. And then what ended up happening was this guy actually got into it from a business perspective, where he started to help companies. And if you wanted everyone, if you wanted somebody to start eating cereal for breakfast, who are you going to go to convince the public to eat cereal? You're going to go to the doctors that all of your patients go to and say, hey, cereal is a healthy breakfast. It's the same
I know that story.
Yeah.
Wow.
It's you read this book and you're like, this is crazy. That this guy is writing about how they do this, not just in the, political world, but also in the business world. And it's he's talking about the create. It's not him creating it because it's been done for thousands of years, but it's just fascinating to read. And then when you turn on the news and you watch the news and you listen to it, and you hear all these people that are just so, like manipulated by what they hear on TV, and like your mind gets my mind gets blown, and you have to kind of like realize like you gotta like not get angry with the people and just realize like they're good people. They just are very easily influenced, which is just human nature, and they just have terrible ideas.
Yeah.
You know what I mean? Like,
Yeah. But also because they just haven't been educated. I think that's what it always comes back to. And then we could go down a whole rabbit hole talking about the education system, but it's just people are uneducated on further, what's the word I'm looking for? Like beyond the screen, beyond that black box that we now, each and every one of us has in our homes that like constantly feeds us information, without even realizing that majority of those news channels are actually owned by, but by the exact same people that are pushing out a message on purpose. Have you seen that video that's gone around where it's like all the different news channels and they're all repeating the exact same line about misinformation? Like it is crazy. Like it is so blindly, or so the opposite of blindly. It is so obvious in front of us that it is so manipulated. Like I didn't even want to talk about the debate that they did. I don't know. I don't remember. Was that CNN? Or I'm still very new to America, so I'm still learning. Where they did the debate, and it's like, why was only one person getting fact checked?
oh yeah. And then when they actually really did the fact checks, it was like, yeah, and that's the
Both
thing.
sides.
Like
Yeah.
it's like, and that's the thing is, it's like I try to be, because like listen, I will say it on camera. I would vote for Trump. I've donated to Trump. I didn't donate to him before. I don't think that necessarily he might be the greatest choice, although I think that he is actually a good human being. And I think that if you like all of the narratives that they like have, like if you go back and look, like the whole, you can debunk pretty much every narrative that they throw at you, like from the racism thing to the, homophobic thing. Like you can go back, like the guy's was a Democrat. He's been very liberal his entire life. They go back to a couple of different things, but you can pretty much debunk everything that they do. But people like take these like short clippets that they put out of him and they just believe it is truth. But he makes it very easy for himself to kind of he makes it easy. He's like, I listen to him talk and I'm like, just shut up. Like, you know what I mean? Like just answer it a little bit more diplomatically,
Yeah.
But
Yeah.
it still doesn't take away the fact that people are so like easily manipulated. It's actually mind blowing that people will hear something, they won't look into it at all, and they'll just completely, believe it. Like I just, got into like a little bit of a debate with a kid on, he was talking about how the GDP is good right now and that stock market is up. And it's like the GDP is good because we're $35 trillion in debt, and we are issuing debt at rates that we've never had before. And GDP includes deficit spending. The stock market is up. Most people don't have any idea of how this works. But when we issue treasury bonds, the treasury basically issues them. There's a bunch of primary dealers that go to auction to buy these. And then depending on where the Federal Reserve is, whether they're actually increasing their balance sheet or not. But basically what happens is those treasuries are used as collateral through what's called the repo or reverse repo market. I don't know if you've ever heard those terms, but it's short-term overnight lending, right? So if I'm a hedge fund and I need to borrow some money to cover a margin or basically to, fill a position, like I can go to the repo market and basically treasuries are used as collateral because they're the most secure form of money, right? So, but what happens is the way that the system works is the treasuries find their way basically into the stock market. So the more debt we keep issuing, the more money just is going to keep going into the stock market, the more that people are going to realize, hey, the dollar, anybody with a brain says, hey, we're issuing more money. The dollar is just going to keep being devalued. It's lost about 35% of its purchasing power in the last 4 years. If I'm smart, where am I putting my money? Not in my savings account. I'm going to put it into things like Bitcoin, gold. If I'm, the stock market, actually, because the stock market, I think, is going to continue to go up. At some point, I think there has to be an unwind. But in my personal opinion, I don't think our government can handle a crash in the market right now because they rely too much on capital gains to keep our GDP up. That's why the stock market is up. The stock market is not up is because companies are just blowing it out of the water, and price to earnings ratios are great. Like, stock market's up because there's a chart that I just shared. If you look at like the stock market and compare it to the price of gold, it's actually been flat since about 1971.
Wow.
Weird year, right?
1971.
The year we closed
from there. It's all from there.
And then the reason behind that is because gold has always been true money. Like, and you can go back and look, and if you look at what gold bought you back in the days of like, the early 1800s, like if you can even go back, like I've read things like they talked about the price of a suit being comparable, like a price of a silk suit in ancient Egypt was if you take like the same amount of gold or the value of gold back then versus what it would cost in gold today to buy a custom suit. It's pretty on par. So gold,
that's incredible.
I don't know the numbers because like I read so much, like this is the ascent of money. Like it's in stuff. I have like 10 books that I read at a time, but it talks about how gold has basically held its value throughout time. So if you compare the stock market to Bitcoin, the stock market to gold, right? The stock market to the treasury, the Fed balance sheet, it's flat.
Wow.
It's gone nowhere, right? So it's like if you change the denominator, the thing that, it's denominated in, is it really going up? Are you really getting more value?
Or is it that the US dollar is just going down?
Exactly.
Yeah. No, 100%. And actually, before I ask you the other question, two things that keep being in the back of my mind. One, do you know House of Habit?
No.
Okay. House of Habit, for everybody, that she is an independent journalist that has been following through. She used to do a celebrity, and she still does. She does she covers like a lot of different topics, but she's an independent journalist, and she's been following through this presidential election run and being like tracking and she's literally as non-biased can be. I love her. I would encourage everybody to go check out somebody like her. So House in Habit, House in Habit, like on Instagram and Substack, or any other independent journalists. But make sure that you find people that are independent journalists and they're not getting paid from one of the sides.
I agree.
And number two, do you know Mike Benz?
No.
Okay, so Mike Benz, he's on Twitter. I think he's like over 300K. Actually, he's probably grown more since he recently was on Tucker Carlson, and Elon Musk has been retweeting his stuff. But I know you'd love Mike Benz. We met him when we were watching a podcast being recorded, and Mike Benz was the guest when we were at the Bitcoin conference. And so we met him. Really cool guy, but also just so his way of speaking is incredible. He used to work in Washington, D.C. He used to write speeches, if I'm not mistaken, for Trump. But he just saw really like the corruption and what's happening behind the scenes in D.C. And now he's like calling it all out. And yeah, so I think you'd really enjoy his content.
I just follow them. I think it's Mike Benz Sire, right?
Yeah. He's like 300 plus, probably even more followers now on it. Yeah. So I know you will enjoy his stuff. And okay, so coming back then, so what about like right now? And maybe kind of coming back to that question of what did we see? What we saw happen in 2008, and now where we're at we've had this crazy, constantly increasing of interest rates. And now we just saw the first decrease. Yeah. What does that look like moving forward? And, I think a lot of people are screaming out like a crash is coming. And even using financial astrology, I see there's something called the 18.6 year cycles, and approximately every 18.6 years. And I mean, you're in real estate, approximately 18.6 years, you see a crash or a correction of the real estate market. And so the years are looking like 2026, 2027 being that next big crash. But between now and then, what do you kind of see happening?
So it's tough to say, because it's like if you were to go back to like 2016 and start to look at like a lot of the things that I was talking about, like where foreign central banks were starting to add gold to their holdings and start to lean off of treasuries, and you started to see like kind of like the lack of faith in the US. There's just a lot of things that had like, and then 2020 happens and we have COVID and we have a complete bond sell off. And then, you have some like bond auctions that like, they're literally just like some of the biggest tails in auctions. Like a tail just means that there's just no demand. And like you had an inverted yield curve at, for so long, which typically triggers a recession. And essentially what is happening is like, they are getting so creative on figuring a way to kick the can down the road, so to speak.
Yeah, I feel that.
And basically, like, in my mind, at some point, there has to be a blowout. What that looks like, I don't know. But all you have to do is go back in history. And it's not just from a fiscal irresponsible standpoint and basically CPI. And I'm going to touch on CPI for a second, because people will look at like inflation and they'll be like, oh, well, inflation's going down. And inflation is not going down. It's just going up at a lower like speed than it was, number one.
Yeah.
Number two, most people don't realize that back in the 80s, like I will have arguments with some of the people that I know, and they'll be like, well, real wages are up, blah, 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 blah. Like, so basically saying like medium real incomes in this country are up. And there's a lot of reasons why that doesn't matter. And I'm going to bring this all back into what we're talking about, because this country is built on a middle class being able to survive. And if a middle class can't survive, not only can you have a blowout from like a debt spiral kind of thing, but you can also have a violent revolution or some kind, right? So in the 90s, under the Boston Commission, under Clinton, they started to realize, like, I don't know if you know, like basically our largest expenses as a country are going to be like Social Security, Medicare, Medicaid, and then it used to be defense. Now it's entitlements and interest on the debt. But long story short, all of our entitlement programs have what they call COLA adjustments, cost of living adjustments. So they're based on CPI. So in the 90s under Clinton, the Boston Commission basically came up with a way to basically fudge these numbers. Basically, essentially what they said was the adjustments that we're giving people are too high, and there's things that can be done that would lower the interest rate. Are you familiar with any of these things or no?
Yes, I am. Yes.
So the CPI. So basically what they did was three things. They created something called substitution, hedonics, and then geometric weighting. So if you CPI, which measures inflation, which is basically a devaluation of the currency. There's no other way to look at that. People can say like price gouging, this, that. Any increases in price on a short-term basis will always be corrected in a free market, because some greedy capitalist will figure out a way to exploit the greedy person, and they'll get the price back down to normal because they're not dumb, right? Yeah. So CPI is the inflation rate. We basically have, if you go back to 1913, I think that the number is like we've lost 95% of our purchasing power in a dollar.
Yeah.
So since the Boston Commission, basically they did those three things. Substitution says if you eat steak and the price of steak goes up, that you should just substitute it for chicken and be okay with that. And that is the same standard of living. Now that's simplifying it, but that's one of the things they did. The other thing they did was something called hedonics. Hedonics says that my TV might cost more this year, but because it has the ability to, get Netflix on the screen, that it doesn't count. Now that's kind of a dumb example, but it was the idea that if a technology had more advancement in it, that even though the price went up, it didn't count. They would back adjust the price to a lower amount. Does that make sense?
Yes, it does. Yeah.
And then the other thing was geometric weighting. And what that did was say, like, let's say the cost of like car insurance went up, 15% in a year. And normally we put it as, 5% of somebody's total overall income. It went up 15%. Well, we're just going to weight it down to only 2% of. So the whole idea was basically, it's a fudge. It's a fabricated number. There's a guy by the name of John Williams, Shadow Stats, that you can go to, you can subscribe, and he has all the calculations like based on what they would be if it was back then. And like his rate right now is like 10% year over year still, the inflation, the actual inflation.
Wow. And that's what Michael Saylor says. If you're not storing your money in something that gains you 10% per year, you're losing money. You haven't saved. You're at a loss. Yep.
And that's about the number. John Williams, Shadow Stats. It's a very like antiquated, like he sends this email out. You can call the guy if you want. But a lot of people in the finance world use him. I think he's like an ex-economist, but it's really like, deep information. I subscribe to it. Now, having said that, what we are seeing in this economy right now is we are seeing the gap in wealth continue to just get bigger and bigger and bigger. And people that are in the top 1, 2 to 5% are doing okay. Like the top 1.1% are obviously doing better than ever. I would argue that even upper middle income people are probably not doing quite as good because the cost of their everyday, maybe their assets have appreciated, but the cost of groceries and everything is astronomical. The cost of energy is astronomical. And then the middle and lower income people are just getting destroyed.
Absolutely.
In my whole point in saying that is that like what I see happening is, number one, I don't think either side is focused enough on that. I think that on the Kamala side, she's talking about price gouging and all that. Well, that doesn't work. You can read this book. It's called 40 Centuries of Wage and Price Controls and How Not to Fight Inflation. It goes back to the times of the Sumerians. It doesn't work. It's always been the same thing. Governments inflate money, and then they try to blame it on capitalists because they're spending and devaluing your money, and they're going to blame it on capitalists, and it doesn't work. So that they're demonizing capitalism on that side. At least Trump is putting people in places like Musk, who Musk has openly said inflation is an increase in the money supply causes inflation, period, point blank. We need to figure something out. At some point, we need to do something with entitlements. Like we have to cut spending as a country or else the dollar is going to be worth nothing. Now, I'm not smart enough to know if we're at a point where that's irreversible, but if it is, that is where something like Bitcoin comes in. And I think people that are forward looking are not just looking at Bitcoin, but I'm a personal believer in owning gold. And the reason for that is because I believe that there's good and bad in both, right? Like gold is less portable. You have to have a safe in your house. You have to have somewhere to store it. Bitcoin has it's a little bit more nuanced. You have to be a little bit more technically savvy. I think overall the market will choose which one works, but I do think there's a place for both. But in my mind, if you're not owning both of those things at this point in time, you're just setting yourself up for complete disaster down the road, because at some point you cannot continue to have the amount of debt that we have, the amount of interest that we're paying on our debt, interest rates being where they are, which I think that they cut interest rates too early, because their whole reason for cutting interest rates was that inflation had kind of subsided and that the labor market was getting a little bit tight and this and that. That's not why they cut interest rates. They cut interest rates because fiscally, the U.S. government cannot handle interest rates where they are because we are going broke.
Wow. Right? And they cut quite a lot.
They 50 basis point cut. Yeah. And all that's going to do is just reaccelerate inflation, probably, in my mind. Agreed. So where do I see us going? Who knows? I think as a country, we have done a really good job of kicking the can down the road and then getting the people in our country that are non-educated to believe that, yeah, things are great, even though they don't, like, people know that they're not great. Like, they go to the grocery store, and when you fill up 2 bags of groceries and it costs you $200, you know that's not okay. You know that everything's costing you a lot more, but they're telling you that inflation is getting better and GDP is good, and so it's okay. And people are, I hate to use the word ignorant enough to believe it, but I guess I would say non-educated to be a little bit more nice, right? Because that's
Yeah.
really what it is. But I think at some point, like, they're either going to inflate us out of debt. Like, I mean, we're either going to default, which we've already done essentially, twice, I would say. They're going to let us go into a complete economic collapse, or they're going to inflate by they'll just continue to just print money to pay everything off until the dollar is worth nothing.
Yeah.
So I think that, I owning Bitcoin and owning gold, I would say, like, things like uranium, any kind of hard asset that,
Real estate?
yeah, I'm not a big, like, so for me personally, like, even been in real estate, like, it's, for me, it's easier to be able to, like, I'm more savvy in the financial world. I don't have to own something physical. I don't have to worry about having somebody pay my rent and do all that. Like, I think real estate has a place in a portfolio for sure. Like,
Yeah.
but I
Agreed.
also think,
It's changed.
yeah.
Yeah.
So yeah, but as a country, like, I don't know. I know that we're in trouble. I know that we are in some kind of, like, we are at a turning point, the fourth turning, where winter is coming. And it's like, what does that winter look like? How bad is it going to be? You try not to be a doomsday. The good thing is that anytime there is a winter, if you're positioned right and you understand what's going on and you educate yourself, it's usually where the money changes hands. So
Opportunity.
yeah,
Love it.
there's tons of opportunity when these things happen. I feel bad for the people that are sitting in 60-40 portfolios that their financial advisors told them that hold no gold, no Bitcoin because they think it's risky. And they're just, I mean, we just have continued to kick the can down the road. And it's mind blowing because a lot of the guys that I follow, like, they've been talking the same talking points for years. And people are like, oh, you're just doomsday, doomsday. And it's like, no, Bernie Madoff ran a freaking Ponzi scheme for like 13 years. One man with the SEC investigating him, and somehow he continued to run this Ponzi scheme. And that's one guy. So you're talking about the largest government in the world, the biggest empire that has ever existed. How long can we continue to run the Ponzi scheme? For a decent amount of time.
Yeah.
What does it look like on the other side of that? I don't know. But I know that there's people that are hurting. And I just wish that people would be a little bit more educated on, instead of blaming greedy capitalists for the problem, blaming the true problem, which is government spending our money recklessly, printing us, and it just continues to get us into debt. So I guess I'll finish with this point. It's like, to me, what our government is right now is, it's like, when I hear somebody say the economy is good, that's like looking at your neighbor that lives in a $5 million house, drives a Ferrari, has a Range Rover in the driveway, has 2 kids, but is, $100 million in debt. They keep borrowing and doing, refinancing of their home. They're letting exchange students move into their house, and their kids are starving, but they're letting more and more people into their house, and feeding those kids and giving money to new kids, but not feeding their own kids, and making their kids go, work 2 and 3 jobs to try to make their own way, but taking care of the people that are, the exchange students, or, the new people in their house. And they just keep going more and more in debt. But from the outside, they got a Lamborghini and a $5 million house, and we're just consuming.
Yeah.
And we're forcing people to consume, because as the more you devalue the dollar, the less time preference people have, meaning, they just want to spend their money quick because they know it's going to be gone, which just kind of exacerbates the whole inflation thing, because it's the velocity of money thing. So we're just we're in a bad position, but I think there's a lot of good on the other side. And thank God for things like, Bitcoin. Thank God for gold. It's just, are you willing to educate yourself on that stuff, right?
Absolutely. A perfect summary and way to end it. I mean, I still have like a million different things I'd love to talk to you about. I think we need to do a part 2 and talk about more things. But yeah, and thank God that we have technology, because now people get to educate themselves faster if they choose to. And that's kind of what even I see Bitcoin's mission is, or Satoshi Nakamoto, whoever they were, it was about bringing power back to the people.
Yeah.
Or reminding them that it's always been there.
Yeah. And I think it's a fascinating thing to think that somebody was that like forward looking. Things have been tried before, but nothing, I think, to the extent and to the degree of complexity that I'm not even, like some of the things that like if you, that book that I said, Bitcoin is Venice, like the technology behind Bitcoin is way over my head. Like I understand like the mining and, all that stuff. And I understand but there's so much to it that's just so complex that like you have to be a coder to really, understand. But yeah, I think we're in a really, I think we're definitely in the fourth turning.
We are definitely in the fourth turning, and it's not affecting just the United States, because I have a lot of international people that listen to this. So just want to let you know, a friendly reminder. I say this with so much love, not to create fear, but it doesn't matter whether you live in the United States or you live in any part of the world. For now, we're not far along enough yet that it wouldn't affect the rest of the world. This is a world issue, not just the United States. So it doesn't matter where you live.
Well, yes, and that is because of the United States. So we offshore our inflation to everyone else by giving them, goods and services, and then holding the US dollar. I mean, essentially, if it wasn't for us being the world reserve currency, the dollar would be worth nothing. But we're basically, because of the way things work, and all the central banks have to hold US treasuries and US reserves on their balance sheet, we essentially offshore our inflation. So it allows us to get away with a lot that we wouldn't be able to get away with. So yeah, I mean, and people don't understand that. They just don't get it. So
yeah. Well, thank you so much for your time and for all the value that you've given. I really appreciate it. Yeah. Thank you so much. Part two coming. Stay tuned.
All right.